Welcome to another segment of Keeping It Real. My name is Rich Brodkin, co-founder and CEO of Home Connect America, and I'm going to bring you today the market highlights for the month of March. And just summing it up pretty quickly, the home prices are still appreciating, but they are moving up at a slower rate. Mortgage interest rates remain historically low levels. That's great for our buyers. And more sellers seem to be lowering their asking prices, and that suggests that the market will pick up for our traditional spring selling season. At the current sales price, Southern Nevada has less than a 3-month inventory. That is up sharply from last year, but still well below what we consider a balanced market. At the end of March, Gelvar reported over 7,000 homes listed for sale in the ER status. That's up almost 85% versus prior year, which is a huge gain in inventory. At this year's current sales price, it is projected that sales will be down slightly from 2018. Gelvar reports that cash sales are slightly down, about 2%. We're down to about 23% of purchases being cash sales versus last year, 25%. Total sales volume in Las Vegas was $925 million, which was down about 11% from prior year. As I stated earlier, homes are selling at a slower pace. Almost 70% of all existing single-family residents sold within 60 days. Last year, the number was 82% sold within 60 days. So we do see a little softening, and buyers are going to have more inventory. We're not going to have as many multiple offers. Once again, with homes in the sweet price, in the sweet spot, we're still getting a lot of activity in that $300,000 price point. These are the stats that we pull from Gelvar, and looking at a housing snapshot. We had over 2,600 units sold, which is down almost 17% versus prior year. Our median price point is $300,000. That was up a little bit versus last month, and up 7.1% versus prior year. Once again, median means 50% of the homes are selling above $300,000, and 50% of the homes are selling below $300,000. In terms of new listings on the market, we showed an increase of over 18% to over 4,400 new listings for the month. The median price on those new listings is moved up to $320,000, which is a 6.7% increase. So when you put it all together, we have over 7,000 units available. That's up 85% versus prior year. That's a crazy number. But even with the 7,000 units, it still represents only a 2.7 month supply, which is significantly below our normal supply here in Las Vegas, but represents over 120% versus prior year, which we all know there was no inventory. Again, looking at the units sold for March, we had over 2,600 units sold, $300,000 median price. The average price was $353,000, which was up almost 7% versus prior year. In terms of new listings, we had 4,400 new listings, and the median price on those, as I said before, is $320,000. The average price is $407,000 for our new listings. Once again, the luxury market is a little soft, but that drives the average price way up. In terms of availability, we have 11,500 units available, with the median price being $325,000 and the average price of units available $467,000. Again, new homes are really driving that increase significantly. In terms of availability, excluding offers, we have over 7,000 properties available, again with a $345,000 median price, with the average price being well over $500,000. So an increase of about 0.5% over prior year. So once again, we have 2.7 months inventory, up significantly over last year, 85%, but down 25% from the previous month. Days on the market. This is always an important slide. Okay, about 52% of our homes sold in the first 30 days. Okay, versus 48% last month and 70% prior year. 31 to 60 days, you're looking at about 18%, which is down 3% from last month, but up 6% from the prior year. In the 60 to 90 day category, in March, 12% of our homes, which is down a little over 2% from prior year and up over 6%. 90 to 120 days, we're looking at 8.5% of the market. Okay, last month it was 7.6, and last year it was about 5%. 121 days, that's predominantly your luxury properties. We're showing an increase of 9% versus prior month and 7% versus last year. Once again, I'll be looking forward to seeing you next month for another update of Keeping It Real. Thank you very much.